Earnings week continues, and one of the larger positions in my portfolio is ASML, and they just released their latest quarter's earnings. Now, so far, my gains in ASML have been pretty great for how long I've been holding the stock. I'm currently up about 51% on this position. But historically speaking, earnings have not been good for ASML, at least the earnings releases and the market's reaction to those earnings reports. Look at how much they've missed on earnings reports in the last few years, and on top of this, they've had an average move of negative 4% after earnings reports. But if we look at today, the stock is currently up by about 3.8%. It's constantly moving, and if we look at them year to date now, they're up 47.28%. And with this jump up, the stock is trading above $1,000 per share. For reference, at one point this year, they were trading below $600 per share. So again, a huge run up year to date so far. So let's go ahead and dive into that earnings report and see what we can find. Now, to start off, we can see Q3 GAAP EPS came in at 548, which was a slight beat, and then we saw revenue at about 7.52 billion euros, up slightly year over year, which was also a slight miss. So a slight miss on top lines and a slight beat on bottom lines. But one of the things we also have to make note of is if we look at fiscal year 2025 fourth quarter guidance, they actually increased their total net sales projections. Their outlook increased. So fiscal year 2025 guidance is now expecting an increase of about 15% when it comes to net sales and gross margins of around 52%. So let's take a look at that. For reference, if we look at gross margins over the last few years for ASML, we can see the average over the last decade is around 47.82%, and it's been increasing steadily. We can see the 5-year average at about 51%, and last year is at 51.28%. So what we're seeing from ASML is margins have been expanding. A gross margin of around 52% is a good sign. Now, a solid earnings report from ASML actually impacts the entire market as a whole in reality. And the reason is simple. ASML is the backbone of the AI semiconductor value chain. The company sells EUV lithography systems that can cost anywhere from 20 to even over 200 million. And they're being bought by companies like Taiwan Semiconductor or Samsung or even Intel. So you can see how everything is linked back to ASML. So essentially, if demand stays strong for these other companies a little bit further out on the value chain, then it'll all funnel back to ASML. And from what we're seeing for projections right now, the AI market is going to grow at about 25.6% on a compounded annual growth rate basis through the year 2030. So buying ASML stock is essentially like buying the stocks that were selling the shovels and the pickaxes during the California gold rush. So we need to talk about the valuation, and we need to dive deeper into the recent earnings report. So let's go ahead and do exactly that. If we start scrolling down, take a look at the investor key messages. The semiconductor industry remains strong, driven by AI adoption across an expanding application space, and is expected to surpass 1 trillion in revenue by 2030. So they're essentially reaffirming what we were just talking about in regards to the AI market. The demand for AI has not slowed down. It's not going away. There's been a lot of talk of a bubble, but so far the earnings growth is following. And ASML has now stated that by the year 2030, they expect annual revenue to be between approximately 44 billion and 60 billion. So again, let's put that into reference. Last year's revenue, 2024, came in at about 28 billion euros. So we're talking about significant growth in the next 4 to 5 years, and they're also stating that gross margins will be between approximately 56 and 60%, which, like we just saw, means that the margins are going to continue to expand. It's climbing higher essentially every single year. So when you have a company that's growing revenues at a high rate and also the margins are expanding, what you get is explosive earnings growth. And that's what's expected to continue to happen, and it's exactly what's been happening, especially in the last few years. Look at this. EPS in 2020 was 849. 2024, about 1925. So we saw more than a double in less than 5 years. And then if we look at this company through the lens of a dividend growth perspective, look at this last statement. We expect to continue to return significant amounts of cash to our shareholders through growing dividends and share buybacks. This is what I love to see from stocks growing earnings and free cash flow at a high rate. And in fact, if we scroll down to the 11th slide, we can see this explained a little bit more. Look at the growth of their dividend over the last few years. Now, we have to remember, this is a European stock, and European dividend policy is often a little bit different from the US in different ways. Oftentimes, they'll pay out dividends semi-annually. Oftentimes, they only increase the dividend if earnings and free cash flow actually increase. They're not committed to growing it every single year. But what we see from ASML, especially if we include share buybacks into the mix, is they're returning more capital to shareholders every single year, and they're able to do this in a very sustainable fashion because earnings and cash flow are growing at such a rapid rate. And here's one of the things that I just love about ASML. They were able to heavily buy back shares during a time period where the stock was clearly trading at a bit of a discount compared to its intrinsic value. That's exactly when we want to see stocks buying back shares. Now, we've already touched on this outlook a little bit and talked about how gross margins are expanding. Sales seem to be growing at a healthy rate. But one of the things that I also want to point out is when we talk about ASML's business model, yes, they generate most of their revenue from machine sales, selling the EUV lithography machines for mind-blowing amounts of capital. That typically makes up around 70 to 75% of their revenue. But one of the things we also have to take into account with ASML is that around 25% of the revenue they generate comes from simply maintaining and upgrading the thousands of machines that they've already installed worldwide. So why is that a huge benefit? Well, that's a very high margin business. It's a recurring revenue stream. It provides more predictable income. And so the more machines that they sell, the more machines that will need servicing and upgrades over the years, creating more recurring revenue. So when we see things listed like the fact that they sold 72 lithography systems in the most recent quarter, yes, that's great for top lines, but it's also going to provide some recurring revenue in the future as well. I think that's a point that a lot of people seem to miss. Now, I want to point out something else that's often misunderstood about ASML, and that's their free cash flow. When we look at ASML's free cash flow charted out quarter by quarter, what we see is actually somewhat confusing for a company that we know has a lot of demand. For example, 2022 free cash flow, $7 billion, 2023 dropped back down to $3.2 billion, and then in 2024 over $9 billion. Why would this be the case? Well, really it comes down to the timing of revenue and cash collection. Like we just saw, when it comes to the actual systems that they're selling in the most recent quarter, they only sold 72. Now, the caveat is each of these machines can cost $100 to $200 million. And these machines can take up to a year at times to actually be built and installed. So because of this, yes, they can make a sale, but the actual cash collection can occur at very different periods of time. So for example, maybe they have a great quarter of sales, but the actual cash flow doesn't occur until a few quarters later. Again, this is another example of why it's so important to actually understand the business model of the company that we're looking at, because the numbers here by themselves would actually be a bit concerning, at least if you didn't have any context. Now, we need to talk about the valuation for a moment, and for reference, if we look at the average analyst estimate according to Tipranks, they're giving it a fair value of about $979.04. At least that's the 12-month forecast, which means there's just a little bit of downside based on the current price. Now, to be fair, there's not been a lot of analysts actually give ratings to this stock. It doesn't get quite as much coverage as some of the other big tech companies. But let's go ahead and dive into some of these numbers and see what we can find. To start, if we jump over to our valuation spreadsheet, plug in ASML. The data will load in, and like always, you can download any of my spreadsheets and get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials directly into your spreadsheet by going over to tickerdata.com. But if we jump over to our historical multiple valuation and zoom in just a little bit, what do you notice about their PE ratio over the past decade? Yes, it's fluctuated a little bit, but for the most part, if we just look at strictly the numbers, it's remained relatively high. In fact, if we look at the average PE ratio over the last decade, it's sitting at about 35.24, when for the trailing 12 months, it's sitting at about 36.1. So it's essentially trading, at least on a PE ratio basis, at the exact same valuation that it's traded at over the past decade on average. It's only off by about 2.5%. If we look at ASML on a price to cash flow basis, we can see it's actually trading at a little bit of a lower valuation than on average. But again, one of the things that we did point out is those cash flows can vary quite a bit. So perhaps that's not always the best way to look at ASML. So what type of returns can we actually expect from ASML in the future? Well, if we just go with the average analyst estimate when it comes to earnings per share through the year 2029 and assume about 13, maybe 14% EPS growth, which in my personal opinion, I think that could be a little bit on the low end. And then we just assume that it trades at its average PE multiple, which it's pretty much trading at right now at about 35.5. we can see by the year 2030, we'd be looking at about 88.6% upside, which doesn't include dividends. If you include the dividends, it'd be right at about 100%, giving us a compounded return of over 11%, which would be market-beating return still. Now, if we look at a more conservative estimates, maybe we bump down earnings just a little bit and assume the PE ratio falls back all the way down to about 30. What we can still see is by the year 2030, the compounded return still looks fairly attractive. It would probably be in line more with market averages. But finally, if we look at ASML from a discounted cash flow analysis model, again, this is not a perfect way to value ASML in my opinion because the timing of the cash flows can vary so much, but if they grow free cash flow at a rate of about 15%, we can see ASML would have a fair value of about $917. Now, the last thing that I do want to point out, again, in regards to guidance for ASML, we can see what they're projecting by the year 2030, but what we've learned from management over the last few years is ASML management typically under-promises. That's not what most companies do. In the past, they've under-promised but outperformed. Just something for you to keep in mind. And on top of this, we have been seeing more insider buying in the last month. We've seen 4 unique different purchases from different individuals. So is ASML trading at a bit of a premium? Maybe at its current prices, just a slight premium, but there's been immense opportunities to buy this stock throughout the last year at what I think was a great valuation, and that's exactly what I was doing. In fact, over on Dividendology.com, typically once a month, I'll send out a list of stocks that I believe to be undervalued, and ASML was a stock I was pointing out just a few months ago when it was trading at a much lower price. There's a link to that newsletter in the description. So go ahead and let me know what you think of ASML in the comments down below if you plan on buying or selling, and like always, if you'd like to be able to download any of my spreadsheets and get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials directly into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.